What is the depreciation recapture tax rate? Have you ever wondered how selling a rental property can impact your retirement savings? One key factor to consider is the depreciation recapture tax rate. This tax comes into play when you sell a rental property on which you have claimed depreciation deductions. Depreciation allows you to lower your taxable rental income by accounting for the wear and tear on your property over time. However, when it comes time to sell, the Internal Revenue Service recaptures some of those tax benefits. So, what does that mean for you? The depreciation recapture tax rate for real estate is capped at a maximum of 25%. This means that the gain equal to the total depreciation you claimed over the years is taxed at this higher rate. In comparison, the typical long-term capital gains tax rate usually ranges from 15% to 20%, depending on your income bracket. When planning for retirement, especially if rental income is part of your strategy, understanding this tax is essential. It can significantly affect the net proceeds you receive when selling your rental properties. If you do not plan for this tax, it could impact your retirement savings more than you might expect. Here are some practical tips for retirement planning with rental income. First, anticipate the tax impact of depreciation recapture when you plan to sell your rental properties. This foresight can help you make better financial decisions. Another strategy is to consider a Section 1301 exchange. This allows you to defer depreciation recapture taxes by reinvesting the proceeds into a like-kind property. This can be a smart move if you want to keep your investments growing without the immediate tax burden. You might also think about converting rental properties into primary residences or holding them until death. This can reduce or even eliminate depreciation recapture tax due to stepped-up basis rules. Lastly, consulting a tax advisor can be a wise choice. They can help you optimize the timing of property sales and manage your overall tax bracket in retirement. This can minimize the tax burden from depreciation recapture, allowing you to keep more of your hard-earned money. In summary, the depreciation recapture tax rate can be as high as 25% on the portion of your gain that comes from prior depreciation deductions on rental real estate. This tax is separate from and generally higher than the capital gains tax rate. Understanding this tax is essential for effective retirement planning involving rental property investments.